Hello, folks. Welcome back to another installment of Monthly Insights with our good friend David Bishop. We are here this week, today, regarding April 2023's eGrocery Insights Report.
There seems to be unfair criticism of retailers' pricing, which I would kind of oppose. In fact, I would take just the opposite position that it's on the consumer to find the best product. In fact, I was shopping over the weekend, and I whether it's for a workshop or whatever, I'm kind of coming to the conclusion that most grocers don't know who's doing what online. Uh,
Why do you think that is?
well, when I've asked retailers what other retailers are doing online, they don't get it right. And that tells me there's a fundamental disconnect. I think also there is this kind of split personality when we talk about pricing. I mean, again, this is off the side. I don't think the topic's been framed correctly from the retailer side. Because I think we're not framing it right. We're framing it in store versus online versus first party versus third party. People say prices online are high. Well, that's third party. That's not first party, right?
Right.
In store versus online is a different framing. But I saw a note that someone posted on one of BMC's posts recently talking about. I'm curious how online and in store differs by loyalty, price sensitivity, incremental, impulse. Those are really good questions. And, I think in short, online and in store are very different currently. Online is a buying function, in stores a kind of a shopping function, right? Where there's more discovery, right? More aspiration, sensitivity to prices actually are a lot lower online than people give credit to. Now, obviously, you have to parse how you respond to that because it depends on which retailer, which customers you're talking about. But I think in general, the smarter retailers have recognized there is a lower degree of price sensitivity online than most people give credit. It's because they're not looking at price sensitivity right. And then I think when it comes to loyalty, there's this argument that loyalty is more fleeting online. And I would say, again, like price sensitivity, that's somewhat of a nuanced conversation because what the press release shows is if you're focused on online
You're talking
and
about
only online.
Sorry, Dave, you're talking about the April press release.
Yeah. I mean, I'm using that as evidence to say I don't necessarily agree that online loyalty is lower than in store. I wouldn't say it's inaccurate to say it may be lower for most grocers, but I wouldn't say it's lower for mass. In fact, I think it's quite strong online for mass. But that's because they take an omni-channel approach as opposed to a one-dimensional online approach. But again, those are kind of side topics that I can see people get muddied in, and in this day and age of sound bites and quick snippets where everyone wants to share their opinion based on instinct or their degree of informed perspective, you can see the misinformation running amok. And it's really not doing grocers any service right now because, grocers, again, are kind of just falling prey to being, quote, a fast follower, following probably the wrong retailers for the wrong reasons, but not knowing why. And that's dangerous. But I mean, those are
that comes down to what you and I have talked about previously, about fundamentally having a strategy for your online.
Yeah, I mean, like for instance, I could ask retailers a list of retailers saying, if you went to buy from this retailer, where would you get the lowest price, in store, online? Now, in some of the category killers, the best price is actually online. You pay more in store. But you only pay more in store if you don't realize that you are paying more. They have a price match, and if you spot the difference, which I did at one of the category killers, the store employees are very good and very trained. They say, yes, we do have higher prices in some cases in the store than online. In some cases, the prices are higher online. In some cases, the prices are the same online. But that's a category killer where if you're thinking, okay, if a lot of people go online for these, take pet. This is where the category killer was, pet. You generally got an order frequency of once a month. maybe people start online. And if their research has shown that most people start their shopping path online, they're smartly putting the best price online, right? And in some cases, the best price online is 10 to 15% lower than what's in store. Now, here's the interesting thing. You can order online for pickup at the store and get the online price. Or you could drive to the store and shop in store and pay the 10 to 15% more if you don't realize there's this delta between some products. And in some
Right.
cases, like I said, it's 15%. First party now, right? This isn't even third party. So I don't think that's bad. The old days of price discovery and opportunity cost dictated that in the physical world, customers had to drive around or look around to assess where the lowest price was. So the notion that technology is going to mitigate that and provide, a more efficient marketplace is really kind of showing to be false.
Hmm.
Because if you're only doing that price discovery online with an aggregator, let's say like Market, like Basket, and I'm not even sure how accurate Basket is,
Hmm.
um, you are getting an impression or a perception of the world that, you may say, okay, this is where the best price is. That may not be the case. And some people will go up in arms and say, do I like the fact that I pay more for a product online? Of course not. But the key question is, do you know that, right? And if
Right.
you don't
Right.
know that, what that really tells me is that you don't care. And it's a question of, do you value convenience more than cost? If I'm
Right.
shopping in the store, I'm there for a variety of reasons. And pet, I love going in because I can pick out some toys. I can see the cats being there or the dog adoption. If I have questions, I can talk to an employee. They're knowledgeable. Um, I'm not there to get the best price. Now that I'm aware of it, I may do it. But in order for me to get that price match, I have to take a picture of what's on the shelf and take a picture of what's online, and then they just ring it up as if I
Mhm.
bought it online. But they put it on the customer, and I think that's a fair uh, uh, approach, because if you're not doing that, that just signals that price is not more important, or cost is not more important than convenience, right? And I think as an industry, we got to get away from being afraid
Mhm.
of saying that the customer doesn't like this. Well, if I told you, Mark, do you want to overpay for something? No, you're not going to like that. But if I never told you and you never knew, is there a problem with that? I think in theory, the answer is no,
Well, it's
because in practice, the person who cares most about it would find that out and
well.
then
Let
get the
me
lower of the two.
so let me ask you this: so you have retailers who bake it into their market positioning, their taglines, that they're the lowest price leader, the more affordable option, um, and I think
But the
that
question
to
is how that's framed, right? What's the reference point? Is
Mhm.
it against in store or against another competitor online, right?
I think when they're positioning themselves, it's against their competitors generally, whether that's in store or online.
And I would push back and say, do they have evidence that that strategy resonates? Meaning, does it work?
Hmm.
In a market where most conventional grocers are 10 to 20% higher than the low price leader. I think everyone knows, or at least gives credit to Walmart for being the everyday low price,
Right.
right?
Right.
And Aldi's right there. Uh, for everyone else to claim they have low price is a little bit nonsensical, because the evidence doesn't support that, and I don't think consumer perceptions support it. So the question is, what's the outcome that you're hoping, and do you believe that strategy actually works? I haven't necessarily seen that. I mean, most conventional retailers are high low, so
Hmm.
they're by nature promotionally driven, so they're not a ADLP, whether it's pure EDLP or a hybrid. So to me, the price position is kind of a non-starter for most conventional grocers, because they don't own the low price position in reality or in perception relative to the way the consumer looks at them. You know,
Let me ask you: did you see the headline around Costco's second consecutive month of lower e-commerce sales.
Yeah, I mean, I saw that, and I think there's two things there. Without doubt, if you want to get the lowest cost per unit, Costco is the place to go.
Mm-hmm.
But that's on a relative basis. In absolute terms, you have to shell out, significantly more money at Costco to achieve that realize that benefit. So well, the reality there at Costco is they may be seeing a degree of pullback because frankly consumers don't have that much extra money. And even with the appeal of the lowest cost per unit out there, and there's no one who's going to beat Costco, period, full stop.
Mm-hmm.
um, it's a function of how much money they have to spend to take advantage of that opportunity. I don't think that's terribly surprising. At the same time, I think their in-store business is still relatively healthy, and the way they've structured their omni-channel, programs is they're trying to waterfall the people back into the store. So while I don't know the specifics about their, in-store comps, the e-commerce just reflects a growing reality of people want to save, but they need to spend to save in the case of Costco, and they may just not have as much to spend today. And again, we're at the end of you know the pandemic officially, according to the federal government.
Right.
We've seen most of the pandemic related emergency payments sunset. We are still faced with persistent elevated price inflation. And more and more owners, especially those who have the adjustable rate mortgages, are feeling the pinch more so today, as well as those who carry a balance on their credit cards. So not entirely surprising. And especially now we're going toward the debt litmus ceiling cliff. We're going to have more disruptions in the market, because even if we come to a successful conclusion today, there's a cost for waiting. So not entirely surprised by that. Costco's a great retailer. They'll bounce back.
So let's talk more about then the April numbers, because at the same time as you have that one retailer who's reporting lower e-commerce sales for all the reasons that you cited, at the same time the April numbers are pretty much in line where they were last year. Or is that the case?
Yeah.
Or is there a new one?
There's a lot of variability beneath the surface. The top line numbers are up almost 1% year over year at 8.2 billion. But when you look at the three segments, obviously ship to home continues this kind of longer term secular decline, down almost 19%. On the opposite end, you got delivery kind of really spiking back up almost 20% year over year, and pickup slightly down about 3%. Obviously, there's a lot of, discussion within those numbers. What's driving that? Why are we seeing what we're seeing? Is the thesis about pickup still hold true? And I think the challenge for most retailers, as Mark, in your conversations, when we look at the macro market, it provides us a very broad view of what's going on in the market. And that's very helpful for certain things, but it can obscure issues that become more visible or reveal themselves when you look at a format or a particular banner. So, anyways, that's kind of the top line.
The delivery numbers, I think you're saying they're up 20% year over year. Explain that to me. Is it because we had seen in the long term forecast is for pickup to exceed delivery in terms of the preferred most popular receiving method. What's driving that 20% increase?
Well, first and foremost, delivery is lapping the easier comps of the three across all three. It declined last year twice as fast as the other two segments. So consequently, it's coming off a lower base versus last year. So that's one part of it.
Yeah.
And while the other two reported negative average order values versus year ago, delivery is up slightly, about 5%, still below the rate of inflation. But I think, where it really came is in their monthly active users bouncing back. And I give credit to the delivery providers for continuing to better service the addressable market. As we have retailers adding new services, they're potentially reaching new customers for themselves, or
Hmm.
creating new opportunities to drive sales through delivery. At the same time, pickup continues to be, hamstrung to a degree based on how aggressively retailers roll out and execute their pickup programs. And we still have, in some cases, significant gaps in
Correct.
market coverage for retailers with pickup. And we know at the micro level, pickup is actually extremely healthy. And in fact, the thesis for the long term outlook still stands that pickup will be the dominant method. It's just that, these delivery moves by these disruptors continue to muddy the top line picture, and as a result may confuse um, what retailers think is going on in the market and why. And that's an unfortunate reality for an emerging segment where distribution is still being built. I mean,
Mm.
availability is driving growth to delivery right now simply through greater saturation of the market at a greater rate than pickup is. So I think that's some perspective that's important to remember. It's also
Very good.
important to remember that more households prefer to use pickup, and if you were talking to a retailer who had pickup and delivery available to their households where they had the choice, it would become extremely clear. In most cases, pickup will be the preferred or dominant method, and that the crossover, even within a banner, is extremely low. We're talking low single digits. But for retailers who are only in delivery, they only can monitor what they measure and what they have, and so if they rely on third parties to provide them that insight, they're going to get a virtuous cycle that kind of keeps them in delivery. Maybe they move into pickup eventually, but they're still missing, more than half the market if they're not in both.
Yeah, I agree, and I couldn't agree more. And I think it's just repeated reminding of the audience that that is just not the one perspective that they should be listening to.
I think the other thing to point out, and I think
Mhm.
we mentioned it in the release, is that grocers' model is very different than Mass's model. We can see that most clearly when we look at share of orders. So this is across all three methods: pickup, delivery, and ship to home. Grocery skews quite heavily to delivery,
Mhm.
whereas mass skews quite heavily to pickup.
To pick up. Yeah.
And pickup actually is growing faster than delivery within mass, although they're both growing. And if you look at their strategies, you can see they've done a very good job of building a strong pickup service that delivers the consistency and value that the customers expect, and they're being rewarded with it. And it's only being amplified further by the fact, in the case of Walmart, they own the low price position in reality and in perception from the consumer standpoint.
Yeah, yeah, and absolutely. And I'm glad you mentioned that because it's an important point that we need to continue making. David, let's. Is there anything that I haven't asked you that you want to comment on for this one?
I think the only other thing is that we've noticed that the repeat intent metric really fell off the table in April, dropping a considerable amount versus prior year. And that's concerning for grocers for two reasons. One, its drop off is really driven by, almost entirely by, the most established, most frequent users, because the first time users actually reported an increase in likelihood, albeit a small gain.
So,
Uh, and then, and then I
is there
was just going to say,
fatigue?
second, what's that?
Do you think there's fatigue at the grocery level for repeat? Yeah,
Well,
repeat online
I mean,
users.
I think it raises a red flag that should be investigated as to
Hmm.
why are our most frequent, hence loyal customers, becoming much less inclined to repeat this experience in the next month. I think, to answer that, you then look at the second red flag that's concerning for grocery, and that is grocery is what's driving the intent rate down. I mean, while mass did have a decrease in its repeat rate, the percentage decline that it had was half, if not one third, that grocery had. So, it then begs the question: what is it that customers are experiencing in grocery that's causing them to react this way differently than what's going on in mass? Is it price? Is it some aspect of the shopping experience, whether it's for in-store product availability, service speed, dependability? I don't know, but again, it should raise a flag for the grocers to really interrogate their business, look at their customer satisfaction scores, and try to diagnose what the root cause or causes may be that are contributing to that decline.
Yeah, I think that's a great point. Whether it's something on the experience, either, out of stocks, um, the receiving method in the parking lot, or via delivery. It certainly seems that the mass merchants have more control over that metric of success than based on the release the grocers do. Well, that's David. I appreciate your time today. As you notice, I am out of the basement, and happy to be
Yeah.
be out and traveling. So till next time, Mark Fairhurst. David, how can people get a hold of you if they want to carry on the conversation?
They can reach me at david.bishop@brickmeetsclick.com or connect with me on LinkedIn.
Very good. That's it for this month. Bye-bye.